Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. And yes, the one and only Anna Kelly is back. How you doing, Anna?
I'm doing great. Great to be here with you.
Nice to be here. I look forward to our Wednesdays. Your playlist is amazing. People have to check it out. Today was CPI day, and you've actually been pretty busy this morning. So you have not seen the latest CPI readings for headline and core. Is that correct?
That's correct. I was working on taxes and with the contractor downstairs, and I haven't even looked at the news yet today, which is rare. So you surprise me.
Okay, cool. So kind of let me set this up. I did a call, like a live stream yesterday morning, just ranting that I was afraid the numbers would come out pretty close to what actually came out. And I'm like, this could be a worst case scenario. And I think the worst case scenario just happened. Like, I couldn't have designed a worst case scenario. So let me give you the numbers. Let's sit on it. Let's have a discussion. So
Great.
first and foremost, headline. Headline came down as I expected. I was pontificating 8.3. The media was saying 8.7. Kind of split the difference, came in at 8.5.
Okay.
So it came down, right? So I'll do the numbers and then we'll break it down together. And then there's core. I thought core would go up. Again, I thought if headline came down, core went up, we might get the Fed with a backbone and do something in August. Headline came in, or I'm sorry, core came in flat, so 5.9, which in my mind is kind of the worst case scenario. It's basically 6% core. Rent is still a problem. Wages are still going up. It's, as we see from more and more companies in the latest earnings announcements, they're no longer eating margin. They're raising prices.
Right.
Services are going up. Stuff is going down. It's kind of everything we've talked about. And now what I think happens, Anna, is we get to listen to 2 months of peak inflation, buy the dip. Rates are going to go down. Maybe more people are going to start buying housing. It's just like, and the Fed's not going to do their job. They got, it's, again, to me, these are the worst numbers possible. They're just weak enough where the Fed could do nothing in August. They can say, hey, we're data dependent and all this other freaking nonsense. I don't think they're anywhere close to neutral. They're at 2.25, with a core at 5.9. They're 3x below that.
Right.
And now we just get to hear the folks like Kathy Wood say, oh, look, deflation, bullwhip, it's coming down. It's faster, faster, faster. And oh, by the way, core didn't move. I mean, anybody think gas and food's going to be cheaper in the winter? I mean, really? Do we not see this coming?
Yeah.
So I think it's horrible. What do you think?
Yeah. You know, you just caught me on it, so I haven't had time to think through it in all those different ways. But here's the thing, if Powell, they have said that they are committed to bringing inflation down to 2%, right? So we're not there yet. No. Yes, it is coming down slightly, right? Which is they're hoping for. Of course, they don't want to say we're in a recession. So they're hoping that they can say, rate increases are working, things are, coming down. But at the same time, they understand that if they don't get a hold of inflation, we're toast. And Bullard came out about a week ago or so and said, hey, we're going to keep raising till we get to neutral, 3.5, 3.75, 4% federal funds rate, because they think that's what they're going to need to get CPI down to 2%. So I'm going to guess, I'm going to pontificate too.
Sure, let's have some fun.
That the Fed is still going to raise rates, right? They're going to say, we can see that what we're doing is working, but we're not there yet. We have to keep going. And hey, the economy's still strong enough because wages are up to be able to handle this. And as I kind of said a little cynically last week, right? The fact that the government just passed something to allow us to push forward sustainable development and tax increases, they can't admit that we're in a recession. They can't, because otherwise people are saying, how can you raise taxes on the majority of people if we're in a recession? So I think the Fed, even though they're supposed to be apolitical, doesn't want to say before midterms, we're in a recession. The Fed and the White House are working closely together, right? They always do.
Sure.
And they're not going to want to admit that things are slowing enough to be concerning. At the same time, while they want to say we're starting to slow inflation. So I think they're going to keep using Fed speak to basically say things are getting better. They're neutralizing. Don't worry. No big recession. and no big reflation. We've got it, inflation. We've got it under control. And these numbers are showing that they're coming down slowly and naturally, with wages and jobs still showing that we're a strong economy. I think that's what they keep saying, but they keep saying we have to keep raising until we get it down to 2%. That's my guess.
Yeah, I think that's all right. But so one thing I think happens, and again, I've been screaming for the Fed to have a backbone and do more, right?
Yeah.
Break it fast, get it over with so we
Yes.
can, so it's painful, but at least it's quick.
Yes.
Well, these numbers are just bad enough that they're going to do nothing in August, which in my opinion is a mistake. They're going to let another month go by while wages retrench, wages get worse, rent gets worse. And core is still the big problem, right? I expect the stock market to be up today. We're celebrating 8.5% inflation. I mean, is that really what we're doing today, folks? 8.5%. We're going to celebrate that. And oh, by the way, rates are going to come down. We're both in real estate. There's a chance that the 10-year comes down, the 30-year mortgage rate comes down, and the animal spirits kick back up in housing if rates go low enough. I mean, that's not what we want.
It's crazy, you know, and with all the news, whatever the Fed does, I mean, they rock consumer psyche, you know, business psyche, producer psyche, builder psyche. And so, you know, they don't want things crazy up and down and up and down. They really want to keep things fairly stable, but at the same time to get us enough bearish on the economy that we stop spending money so much to help inflation, because the rates themselves aren't gonna do it. So they're between a rock and a hard place. They really are, which we've said from the beginning, right? You know, I've been talking about that. Like the choice is, you know, recession, depression, or mass inflation. And and I'm expecting it to be kind of this middle ground, aka stagflation, other than, you know, the high wage increases. You know, we're starting to see a lot of layoffs, right? So I think what they're doing is making us nervous, hoping that they start destroying wages, which they've said. They're not going to say it in those words, but they want wages to come down, because it's kind of the one thing that's keeping us spending a whole lot of money, that's keeping inflation from coming down. So if they can get us to worry a little bit about the economy such that we quit spending, you know, producers have to cut costs, they lower wages, then they can kind of start making an inch on the supply, you know, supply and demand balance that rates can't do. I just think I disagree with you that they're going to do nothing. I think they're still going to come out in the next meeting and they're still going to raise rates.
So okay, so we agree on that, but the next meeting is September, not August. What I was hoping, again, I said yesterday that headline's coming down, but I wanted core to go up, because I think if core went up, say 5.9 to 6.3, we get an August surprise. That's what I'm saying is off the table.
Right. I see what you're saying. Yeah.
So now let's talk about September. You and I both agree they're going to do something.
Yeah.
I believe we're going to start hearing the Wall Street talking heads talk about a pause or a quarter. I think all of that is a mistake. It has to be a half at a minimum, if not a full 75. What do you think about all that?
Yeah, I really think they come up with 3/4. I mean, they flat out said they're not going to backtrack so quickly when they've already said it's going to take 6 months to even see an inkling of the results of each of the raises that we do. They've said we have to kill inflation. We got to get it to 2. We got to get to neutral by the end of the year. I don't think they can backtrack from that. I think they go 75 basis points in September, unless we see, you know, I think they go 75 basis points in September. I really do.
That would, I would love that. I don't think Powell has the cojones to do it. I think he's going to wimp out and split the difference and do a half.
He could, you know, again, I think that so close to midterms, they don't want to admit we're in a recession. They don't want to admit that what they're doing is so aggressive that it's going to really hurt the economy. So I think they have to keep saying, hey, we're going to be more aggressive. This is more important. The economy's strong enough.
All right. So let's play the rest of the year. So September there will be 2 meetings. So you're thinking 75 in September. That gets us to 3.
Yeah.
Where do we have 2 meetings after that? Where do you think we end the year Fed funds?
3.5 to 4. So Powell, if you go back and listen to 2 press conferences ago, he said, we need to get us to neutral, which is 4%. Then later in the same conference, he goes, well, we need to get us to neutral, which is about 3.5%, maybe 4%.
Yeah.
So he kind of lowered the threshold a little bit.
Okay.
After that, a couple of the Fed governors came out and said, we've got to get us to neutral, which is about 3.75. So we know the Fed is thinking somewhere between 3.5 and 4 is where they want to get us. And a couple of them is said by the end of the year. So, if we're at 3, I anticipate we get to, are we at 3 now today?
No, we're at 2, we're at 2.25.
2.25. Yeah. So I think we get 75 basis points, which gets us to 3.
Yep.
And then another 50 to 75 basis points by the end of the year.
Yeah. So if Powell gets us, and again, I just say Powell, it's really all the Fed. If we get to 4% by the end of the year, I think the Fed's doing their job. I would personally like to see them get there faster. But I'll say this right now. If they end the year Fed funds at 4, they did their job.
Yes.
I'm afraid that they're going to get there in the end of the year. It'll be like 3.25 or 3.5. And that, again, they're just always feel like they're a step behind me. And it's like, come on, guys, get ahead of this thing.
Yeah. It's so hard. There's other things that, the big red herring out there that's not really talked a whole lot about, but it is a major factor is what's still going on with Russia and Ukraine. And now China is, flexing their muscle over Taiwan, which we've said, I've been watching for about a year. And I mean, they've basically come out and said, if you try to keep us from taking over Taiwan, bringing it back into the motherland, right? We're going to make this very difficult for you. And so Pelosi visiting Taiwan kind of, escalated some stuff there. China and Russia, I mean, they have a loose alliance at this point. They're using a new, BRICS type currency. They're trying to replace us as the world reserve currency. If anything kind of, happens over there between China and Taiwan, and I'm not saying that it will by the end of the year, but if anything else happens or things get worse with Russia and Ukraine, the gas pipeline to, to Germany, et cetera, energy costs can really skyrocket over the next several months, as can food, right? So we really have a shortage of fertilizer and all the input costs into food at this point. And so I'm surprised that core kind of came down. I think part of that's because of how they calculate housing costs, which is really nowhere near what real housing costs are. Otherwise, core would still be higher. But I think food and energy, Michael, over the next year, the rest of this year and probably into next year, I think those stay elevated. I don't think they come down very much. And I think that keeps the Fed going. We got to keep raising rates till food and energy and, so-called housing equivalent numbers start to come down. So we've got to watch what happens overseas because that really impacts the supply stuff that the Fed can't control.
Yeah. I think the Fed's got a lot more work to do. But again, I think what's going to happen is animal spirits will kick in, buy the dip. The retail investor will come in and celebrate. The retail investor is going to come out and celebrate 8.5% inflation by buying stocks that make no money. That's what's going to happen today. Is what I'm afraid of. It's a bear
rally. It's a bear rally. Don't get sucked in, right? Exactly. I'm not a stock advisor, right? And I'm almost out of the market. I do much better in sleep at night doing real estate. I have a few stocks, but the reality is every major bear market, there are bulls that just can't wait for it to stop.
It's over. It's over. We're bottomed. Yeah.
And so every time they see anything that could be a little hint of things getting better, they're going to be like buying, woohoo, everything's back to normal. And then it's not. So I'm not getting sucked in. I don't really watch Wall Street and how they react. Supposedly they're kind of leading, indicators of what happens on Wall Street, but they get it wrong pretty often. And especially when you're in uncertain times. I'm not watching what Wall Street does at all. I'm really not. I'm watching producer confidence, layoffs, wage changes, production, consumption, and not looking at the stock market to in any way give an indication of what the Fed will do. The one exception to that, to your point, is that the Fed doesn't like to spook Wall Street too much. And so they kind of do this, Fed put to bail out Wall Street if things get really bad. And that's what people are hoping, that if things get really bad and, the market really tanks and we go into a deep recession or depression, that the Fed bails it out and cuts rates again. So that could still happen. But I think that it's too important for them to kill inflation and get CPIs close to 2 for them to maintain any credibility, that I think these rate hikes continue. I really do.
Yeah. Anna, do me a favor. Where can people find you?
Great. You can find me here every weekend on my playlist. I love your comments. Thank you so much. You can find me on social media at Anna Kelly REI Mom, and my website at reimom.com.
Thank you so much.